Hey folks, welcome to another market update from Charting Store. I'm Joe. It's Saturday the 8th of October and I haven't done a market update for quite a while. I was busy with some personal issues and I also mentioned on Twitter that I'm not willing to give you all the information I have for free anymore. There will be some major changes in the near future. I will keep you informed and we are going to have a look at the German DAX and the Dow Jones Industrials, and what you see here is the DAX at the 30-minute time frame. What you see here is my Batman warning I gave you out on Wednesday, and this is what came out of it. I adjusted it a little bit. I also mentioned on Twitter it looks a bit choppy, so here I redraw it a little bit and do me a favor, whenever I give you a Batman warning out, there will be some sort of decline. Never trade that pattern only. It's I personally don't trade by chart pattern or something. What you see here, there's a system behind it. It's just an illustration I put on these price levels and to give you a better understanding of it. So my Batman warning worked out quite well, and for Monday we'll see what's going to happen. And we hop into this 4-hour time frame. It's my cycle chart, and I zoom in here a little bit. That pass worked quite well on time, not really that well on the price levels I put in here, but it's a timing chart only, and this candle here, or that low, is still on the edge of that time frame for a possible short-term cycle low. And from that structure, when I just moved that pass a little higher, it actually did exactly what I wanted. But if this is only a trading cycle low, there should be a higher high. But the problem is what we have right now with these short-term cycles. All these bigger ones out of the weekly, the monthly, even the daily, they all come to an end and they overlap now with these short-term cycles. And the bigger one, they have priority. So I would be really careful with these short-term outlooks because this is a time when everything comes together, that these are out of sync and they don't work that well anymore. That was also the reason why I gave you that Batman warning. And we're gonna stay in the 4-hour time frame. I was showing that chart here like weeks ago. I was giving you that channel with that shoulder pattern in it, and there's also a little shoulder pattern in it. And we reached the statistical targets of these shoulder patterns, and I gave you a little track on it for a possible bounce as a wave 4 before there should be another decline into wave 5 to duplicate that channel, which should end up here somewhere in that 11,500 area. And there are also targets waiting down here for that blue shoulder pattern and also that red one down here. We continue with a daily chart, and I was giving you, a lot of people are not familiar with that, a so-called 9 count. We had one 9 count here, and it dropped even further after we finished or completed that 9 count, and then we had a 7.63% rally from that low here. And I was giving you that 9 count I think on that day here as well on Twitter. I said this 9 count is completed again, and if we just consider the same rally which we experienced here, we duplicated from at least a percentage rally like 7.63%, we should end up somewhere at that 12,700 area, and we did. We had a high at 12,673, and we also had a so-called pop gun at the bottom here, which popped to the upside, and it triggered about, or duplicated that trigger candle about 1.5 times of that height. And what usually happens once they pop, they go back to that trigger, which is here at 12,227. And let me just have a look with what chart we continue. Wanted to show you that daily chart here as well. What you see here is a falling triangle. I was giving you that triangle like 2 months ago. And there's a statistical target down here at 10,515. They seem to be quite far away, but believe me one thing, it's not impossible that we just fall down here, even in October. And there's a chance I expect a lot of volatility coming up in the next few days or even weeks. There is a storm coming up there, and I keep telling you that for the last 2 months. September and October will be wild. And I was also showing you that weekly chart here. This candle doesn't look that bullish anymore with that big tail here at the top. And we are definitely in a left-hand transition, which means we should make new lows. Our cycle low for the weekly is at the end of October. And we should continue selling into that time frame. And wanted to show you that butterfly I was giving you a while back as well. We fulfilled all these requirements. All these requirements were met. Point B was exactly the 78.6. Point C was right in between that requirement between the 38.2 and 88.6. It hit the 61.8. And point D is somewhere between 9,355 and 10,133. And as you can see, I put the weekly cycles also in here, and they would match with that decline if it comes that deep quite nicely. It could be also an event that that it will last a bit longer into November, but just keep that in mind, that bullish butterfly. It's a bullish pattern, that's why it's called bullish butterfly, by the way. You have to wait until that buying zone gets hit, and that pattern is triggered and is ready to fire. There's one thing I wanted to show you as well, and I was showing you that chart here somewhere in, I think it was July, June, whenever we had that bottom here, that double bottom at the DAX. And this is here a seasonal chart concerning the midterms, and I was just redrawing that decline, what you see here. And once we hop into here, it worked out quite well. It just something I played with. I just wanted to show you that it actually followed that path quite nicely. But last but not least, I wanted to show you the DAX course index, which is the DAX. Well, let's put it this way, it's actually the real DAX, because it doesn't consider the dividends which are paid out by the company. So it's not a fake index like our performance DAX everyone talks about. And what you see here, I had a deeper look into that inner structure, and that was concerning waves, chart padding, and also some indicators. And what you see here is, and it turned out to be a very nice falling bullish Wilbur wave wedge. You don't really see it in the DAX performance index, because this low was clearly lower than this one here we made in March. And so yeah, we have a falling bullish Wilbur wave wedge. And yeah, concerning what I just said, the inner structure, I expect another drop here, and once we just measure that, that would be another 12% to the downside before there should be a larger rebound, a rally coming up. So just keep that in mind. It's always good to check on both the performance and also the course index if you're trading the DAX. A lot of DAXes in this sentence. So let's So we're going to continue with the Dow Jones. Here, by the way, is that 9 count I was looking for. That 9 count I mentioned in DAX the first time, and I said a rally is very likely to the 12,700 area, but we continue with the Dow Jones Industrial. And I would like to start off with the smart money flow, which you see here at the bottom in red, and you see the Dow Jones on a log scale here in blue. And who is following me on Twitter, I was mentioning on Tuesday that smart money is selling into that rally. They were selling stocks, and that rally was driven by options only. And you also see that in here. You see that quite intense rally here on the Dow Jones, and smart money started to sell at the beginning and then went up a little bit as well. But there's also another indicator for it to have a better or more accurate look on it. But I wanted to show you something else. On the long term, we have already a quite strong positive divergence. You see here the Dow Jones made a low and the smart money made a low in June as well. But now what happened is the Dow Jones made a lower low in September, last week Friday, and the smart money flow only declined like 50% of that rally we had in summer. In other words, we have quite a strong divergence to the smart money flow comparing Dow Jones and the smart money. So just keep that in mind, and this is long term, so that means we can even drop further down and smart money comes down here a bit further as well. The Dow Jones is making new lows. That's what I'm actually expecting, but this divergence should maintain. So that's about smart money. So next chart, I just show you this one here at the Dow Jones because that's enough. It's a so-called expanding diagonal. We have the same in the S&P 500, and I was explaining that on a different video, and I haven't changed that black path at all. It just stayed there, and I was telling you that the last wave, which is wave 5 we're in now, that should be the largest, and it should be larger than wave 3, and I was giving you that wave 3 is exactly 5,838 points. So wave 5 has to be more than 5,838 points, which gives you, or which ends up at a target at 28,326 as a minimum. So I also mentioned you also can consider this as a so-called descending broadening wedge, and the first bearish target is down here at 26,807. And these expanding diagonals, they like to retest that lower trend line, and it would fit into that time frame perfectly, end of October, mid-October, or even November. Don't forget it's a daily chart, so timing-wise it's not as accurate. But if I'm right here, we should hit that area somewhere at the end of October, beginning of November. And then we have that pattern also completed as leg 5, which is then the largest once we hit, or once we break through that line. Yeah, that's about the Dow Jones actually. Well, I wanted to give you one more. By the way, I have to adjust the screen. My broker here, they change the dimensions of the screen, so I have to readjust it for my next video. That's why you don't see the scale here on the right hand side. I was posting this count, I think it was Wednesday, and because there were a lot of questions, how would you count that, and we had just corrective flats, which are the most complex correction patterns. You see here, and this was a great example. I was considering this as a wave 1, and then we had an A, B. The B undershot that a low of wave 1, which is an exception, but it's possible. And then we had a C up to finish off wave 2, and then we went all the way down to wave 3. And what happened here, and I try to explain that as well, that usually when you have a flat, you have an impulse to the upside, you have an ABC to the downside as wave B, and then there was that crazy rally push as a C, which counts as a complete wave 4. These corrective or complex flats they occur in bear markets quite often, and because there were these questions, how is it possible that B is lower than wave 3? It is very typical for a flat, but they don't occur in bull markets. They occur in bear markets a lot, and that's what confuses most traders or most people who concern or are into Elliott. And by the way, that gives us a 100% target, and it kind of fits quite well to that expanding diagonal target at 28,347. And since I expect an extended wave 5, we could run all the way down to the 27,000 area. So keep that in mind. That's about it for the DAX and the Dow Jones. I hope I helped you out. As I mentioned, there will be some changes soon, and I wish you all the best, and be careful with the next upcoming weeks. It will be a wild ride, and I hope I helped you out a bit. Give me a thumb up or subscribe me on YouTube, and I keep giving you a few hints on Twitter, not as detailed as what you're used to, but there will be some information for you later on during next week. Wish you all the best, have a nice weekend, and bye-bye.